Welcome back. You're watching Closing Trades right here on ET Now. We've seen some sort of recovery creep into the markets from the day's lowest 0.6% downtick coming in for Indian markets. When you look at the fall coming in the Indian markets as compared to the Asian markets, we're doing fairly better than the rest of the globe at this point in time. But we have Kunal Bothra joining us on the show right now. And Kunal, yes, the market right now, if you look at the screen, is looking pretty better when you compare it to the rest of the globe. No doubt the small and the mid-cap counters are under pressure.
No, I think it's been a good day for the markets. I think except for that first half an hour, first half, 15 minutes of gap down opening, it's been a stable market throughout. You look at the index, intraday chart. We've been making actually intraday, higher lows for the index, from that first, 15 minutes, half an hour of gap down opening, and then the stock specific in the market breadth has been a lot more improving throughout the day. You've seen so many large cap names managing to make a comeback. The tilt for the markets, it looks like, is more towards the financials and the banking names, because I think that's where you're seeing some bit of a stronger recovery, especially the large cap financial names, the likes of Bajaj Finance, Finserv. Then you have Shriram Finance, Chola Finance, etc. Many of these stocks have done reasonably well for themselves today. So that indicates that the market bent is more towards the financial theme. And that, I believe, could be a new trending sector for the markets overall. And we've seen good recovery for many of these underperforming stocks. For example, many of these auto names have made a very good comeback. M&M, the stock which was doing relatively well over the last few weeks and months, that stock is now perched at 3100 plus levels. Maruti's made a good comeback. Eicher Motors hit a new high. So I think there are good signs that the markets are showing that we are into a point where the markets could stabilize and we could now build in a very strong base at 23,000 mark. My sense is that over the next 2-3 weeks, even if the markets consolidate, say for the next couple of days, we should be heading up higher to at least 23,500 to 24,000 range.
And what will lead the markets higher, Kunal? Any particular sector, or is it going to be an across the board move?
The two sectors which I highlighted, for example, financials is one space which I believe the markets are finding a lot of liking, and that's where I believe that the trading momentum is shifting towards, volumes are shifting towards. Then you have the auto pack, which is looking attractive. FMCG stocks have stopped falling, so that's another positive for the markets, which means that we could be looking at a point where many of these FMCG stocks could stabilize. IT stocks, and I believe select IT names, for example, Wipro is looking quite charged up and strong. That stock looks attractive. So there are many large cap names which have started to look attractive. Two sectors, which just mentioned, financials and auto. That's where I would believe that the market should tilt towards.
Right. So, Kunal, then which are your top picks, or are your closing trade picks for our viewers then?
So I look at Wipro as a closing trade pick. My sense is that the stock is heading towards a very strong breakout. We've seen the stock price action post result for Wipro. The stock had moved up higher, but post that the stock has corrected by 3 to 5% kind of a margin. So at current levels of 310, it's a good risk reward to go for a buy in Wipro.
Okay, Wipro, a clear buy. We'll take a very quick break. Come right back. We'll continue tracking markets on the other side. Closing trades right here on ET Now. Let's just see where the closing trades are headed in, and not looking all that bad. Fortunately, just want to mark what the global markets as well are up to, because that's where the bigger shake-off is being felt. While the Nifty is lower just by about 0.5%, you've got almost about 2% kind of cuts coming in pretty much across the board for the European markets. In fact, the DAX is now headed in for a near about 400-point decline, 1.5% lower for Stock 600, FTSE down 1.5%, CAC down nearly 2% as we speak right now. The pre-market trades for the US future, and that seems to be indicating more weakness. It's almost a 600-point drop that the US futures, the Dow futures in particular, are currently sitting on. About 1.5% down for S&P futures, and the Nasdaq futures now down for a 2% decline, almost equating to a 400-point slide. So in that sense, us falling 0.5% is really not all that bad. Chola Finance, Bajaj Finance, Voltas, UPL, Divi's Labs, these are all stocks which are holding out in trade. Vinay Rajani too on the show with us. Vinay, hi, afternoon. What are you making of the market? Seems stable?
Yeah, good afternoon and thanks for having me on the show. So yes, market has turned choppy and Nifty has recovered a bit from the lower level. Today's low is 23,222. So from that level, it has risen to one more than 150 points. So it is trying to stable the trend right now. If we were to look at the overall trend, it is choppy because Nifty and Bank Nifty both have been facing resistance at its 50 and 200 days EMA. So to be precise, for Nifty, the 200 days and 50 days EMA are placed around 23,600 odd levels, and from there it has found resistance and has come down recently from budget days high. So market is likely to remain choppy only. Some stocks will perform, some stocks will not perform. So I am not expecting the directional move on the either side. I am not expecting that Nifty will break the recent lows or it will go below the 23,000 support. And same time for the short time, I am not expecting 23,700 to be taken out soon. So I'm expecting overall consolidation in the market in the next couple of sessions, and stock specific bullish moves could be there. Some stocks will perform and some stocks will not perform. So I'm not taking any aggressive view on the directional side on the either side. So yes, there are many opportunities in the long side. One can look at it, and with a stop loss, one can definitely trade.
Right, so that's the take coming in on the markets, which side of the fence it is headed. We also have Sunil Subramanian joining us on the show. Very good afternoon to you, Sunil. And yes, what's your take now when you talk about consumption? It is the buzzword over the last 3 days. All you can hear is consumption. What's your take on that? Do you think that will the consumer staples actually benefit as much as we are expecting it to?
So, well, it depends on what you define as expectations, because yesterday the consumption stocks on Saturday did rally, but today they are correcting. So the point is like this, right? There's, if you take the FM's number at face value, right? There's 1 lakh crore of money in the hands of the middle class thanks to the tax breaks. What do they do with that 1 lakh crore, right? You assume that the number is correct. So they could save it, they could spend it. Then when you spend it, right? Do you spend it on basic stuff like consumer staples where the entire money goes into buying that, or do you leverage it to buy consumer discretionary items on EMIs, right? Then you get a much higher bang for the buck, right? So on a housing loan, the 6,000 rupees, if you take at 12 lakhs, there's about 80,000 rupees of saving. That's about 6,500 rupees a month. So that can be used to leverage and buy. So the key is that you asked me about FMCG. See, FMCG products are a function of consumer sentiment, right? Because they're day-to-day needs. They are not so much driven by, the interest rates or more money in the hand. And I think so. The budget, if it's helps to change the intent of the consumer to consume, because what was clearly lacking was that the consumer confidence had come down to actually go and replace that toothpaste, before it gets to the last bit or whatever, right? And I think that will happen. So definitely FMCG will benefit, but I think that a lot of the money will go into consumer discretionary because the power of the EMI. So if you're going to buy, let's say, a 6 lakh car, you will now up that to an 8 or a 10 lakh car. You're going to buy a 2-bedroom house, you'll now try and make it to a 3-bedroom house. So this thinking in the mind of the consumer, I think, will help a lot in the consumer discretionary space, because these people are not really bottom of the pyramid, right? You're earning some money up to 12 lakhs, so 1 lakh a month, way above India's per capita GDP. So I think that overall consumption space should benefit, right? So from that point of view, now it's up to the domestic fund managers to figure out which company is going to be the winner in terms of pitching their products at the right place, right? So obviously, just buying the whole consumption pack, because for every winner, there will be a loser. So time for stock pickings, time to understand company strategies on how they are geared to do this. Maybe companies offer more discounts so that you have a better package now, right? And I think ultimately, there's an RBI policy expected to happen. The chances of a rate cut have marginally gone up because the economic survey brought the growth rate for this year to a 6.3 to 6.8, clearly a slowdown from the 7.2, which was expected for this year earlier. So there is some kind of slowdown. Inflation on food is coming down in the month of January. If you see, tomato, onion prices and all have corrected. Oil prices, yes, today they spiked up because of the tariff, but overall, Trump run drill, baby drill, plus the pressure he's putting on Saudi to keep oil prices. I think oil prices will be reasonably stable and move within a band. All of these augur well. Does the RBI governor bite the bullet and do a rate cut? In which case, consumer discretionary will rally even more. So I would say keep your eyes on the overall consumption play, right? Definitely, every consumption company will benefit, but who benefits more is the key call to make at this point in time. And I think that decision lies in the hands of the domestic fund manager. So why I'm saying this is the FIS, thanks to the whole Trumponomics at play now, right, where he's actually running through on his threats on tariff, coming through, creating this uncertainty. FIs are going to sit on the side from the entire emerging market, entire Europe pack, because they want to see the impact, the counter impact. So they're going to stay away from the markets for a bit. But domestic fund managers, and if you see today also, it's the small caps which have corrected the most, then the mid caps, and then the large caps. So clearly, domestic fund managers are selling some of those small and mid caps where they have made a lot of returns and keeping that cash to buy at the right time, which I expect soon after the RBI policy. And the earnings season also has to play out fully. So the point is that in the deep down consumption play, it's a domestic fund manager who understand companies, the market, the micro markets in India much better and play. So it's their thought process which is going to drive this whole. FIS will come. FMCG is a significant part of the large cap index, so we'll get buying support when the FIS return. You got to wait and for some time for this whole Trumponomics situation to ease. So, but let me take your question a little bit for you. Focus it on consumption, but for me, the big takeaway, because of the fact that overall consumption will go up, right? Which company, which some micro sector, time will tell. But if overall consumption is going up, capacity utilization is going to go up. Then I would expect that the private sector capex story should start in maybe 6, 9, or 12 months. And hence, capital goods suppliers for the private sector capacity expansions would, I believe, will be the right pick if you have got a 1 year plus view on the market. Okay, consumption is a story known in the play already, but capital goods could be the surprise pick where I think that accumulating from now on steadily over a period of year could deliver very good wealth creation over the medium term.
That's quite interesting. So other than that, also Sunil, what is a pocket that you would completely avoid right now and you think that's still sort of richly valued?
Richly valued pocket. See, I don't think there's any undervalued pocket to counter your answer, right? So everything I think has been correcting overall from a value perspective, but banks are the sweet spot for me. Somewhere they have still, you see the earnings season of the banks, if you see the outlook, and if my theory about private sector capex reviving by the end of the year, banks have a big role to play in financing. If my theory about the fact that discretionary consumption is going to benefit from this giveaway by the finance minister, then again lending will come into play. And if the 1 lakh crore giveaway, part of it will go into savings, I believe, right? So to that extent, again, it's the BFSI space, right? The capital market intermediaries, the banks who have good distribution, the insurance companies who will benefit from the flows, the stock market brokers, the stock markets itself. So I think that the BFSI space to me overall, I believe is the one which has the most value. When you ask me for avoid, I'm giving you the opposite answer because it's very, very hard to pick. See, obviously for me, defense and railways, those stocks which ran up and then corrected, I don't think they've yet corrected enough. So I would avoid making any fresh, and the budget also has not been any special effort to boost defense or to boost to the railways pack of it. So clearly those, and other than public sector banks, the rest of the PSU pack also, I would say the valuations are still a bit rich. And except for PSU banks where I still feel there's a good play there. The rest of the PSUs I would be a bit cautious on. So the sectors I wouldn't say avoid, but be cautious on would be basically the railways, the defense, as well as the broader PSU pack.
So those are the sectors that one can avoid at this point in time or be wary of. But Kunal, on the charts then, how are railways and defense counters looking to you, given the fact that they've actually been hurt quite a bit?
Yeah, they've been hurt quite a bit, and this is a normal reaction for these stocks just around the budget scenario. We're discussing this on the budget day itself, that how these stocks, they tend to underperform significantly just about on the budget day and then maybe a couple of days post budget. But then post that, we generally see a steady recovery into these names. Albeit it's more or less gradual into these stocks initially, and then after a few weeks, that's where the pace increases for these stocks, and that's where you see these stocks getting into a recovery phase. So I believe that from here on, my sense is that many of these defense stocks, railway stocks, PSU names, and the ones which have been beaten down over the last couple of days, I would believe that they could actually be at a good contra buying zone the indicators are coming back into a deep oversold territory. You might not see an immediate V-shaped recovery into these stocks, but at least an initial time-wise consolidation and then a gradual recovery is what I would expect into many of these names.
Vinay, just want to address some of these financials with you. Chola Finance, Bajaj Finance, and even a Shriram, all looking very strong. But where is it that you think that there's opportunity to buy in?
Yes, in fact, all stocks are doing well. In fact, the Bajaj Finance has taken a lead, and after that, we have seen M&M Finance, Chola Finance, and Shriram Transport Finance. These are performing very well. But if I were to take a bet from this current level, then M&M Finance looks attractive to me. It is one of the stock which has announced the result and recently surpassed the 200 days moving average resistance. So it is looking attractive, and this stock has been doing good. The entire group is doing good. M&M as a auto stocks has also been doing good. So some sort of support is there also, we can say that. So financial, as you said, that financial services index has been outperforming for last couple of sessions, and this is likely to continue. And M&M Finance is one of the stock which I like on the chart. If somebody is taking bet on for trading, then 291 is the entry price. Stop loss can be kept at 286, and we can expect a target of 300 in the short term. So M&M Finance is my pick from this financial services NBFC space.
Take a look at the markets and some of the counters that are actually seeing very sharp up move. You have Divi's Laboratories. That one is an earnings reaction as well as sharp recovery from the day's lowest point. Now the stock is up about 5% or so. You have Swiggy that is seeing a good jump of about 5% on back of the initiation coming in from Kotak Securities. You have Reeves Cotton also holding on to very strong gains in trade today. But you have Titan. That one also could see another steady quarterly performance in the quarter gone by, this on back of the studded jewelry business. And Cat Lane, they're expected to post robust growth. Snehi is here to tell us what the street is penciling in. Snehi.
Well, absolutely. So here's what to watch out for when Titan declares its Q3 numbers. And on a standalone basis, revenue is expected to come in at 16,320 crores, which is an uptick of 26.4% on a year-on-year basis. Brokerages are penciling in an uptick of anywhere between 20 and 26% on the revenue front. So that's going to be an interesting number to watch out for. EBITDA is seen to grow at 13.3% at 1,651 crores. Net profit also, we're expecting a very small uptick of 2% on a standalone basis at 1,060 crores compared to 1,040 crores on a year-on-year basis. Margins, however, are expected to be slightly under pressure at 10.1% compared to 11.3%. Now, a big key expectation here is that a one-time inventory loss of anywhere between 200 and 270 crores is expected on the back of the reduction in custom duty that was announced in the interim budget earlier, but the overhang of that is expected to be present in this quarter as well. Now, as per the company's Q3 update, standalone jewelry sales grew 26%, studded jewelry is expected to grow by 21%, watches by 13%, eyewear anywhere between 17 and 18%. Tanishq on a like-to-like basis is expected to grow by 15% year over year, and Cat Lane expected to post a robust growth at roughly 25%. The company is expected to have added 69 stores during the quarter, taking its total store count to 3,240. Some important factors to watch out for when the numbers do come out: commentary on how the festive season has been, how the wedding season has been, demand trends, profitability across segments, and competitive intensity and product mix. So watch out for Titan's numbers, but well, yes, on a standalone basis, revenue expected to go up anywhere between 20 and 26%.
Expect from Titan, and of course, the stock saw a good spurt on Saturday itself post that consumption fillip that was announced in the budget. Right now also holding up well, even though it's eased off from the top of the day. But a lot of voices on the channel today since morning analyzing what the budget takeaways are, what it means for India in particular, and what with, of course, tariffs now being announced, what does it really mean for India and the outflows that our markets have been seeing? Here's some expert opinion.
To run a more diversified than usual strategy in these kind of markets and clearly focused on large caps. Having said that, I still feel to a small extent the banks look relatively better, the large banks, as I've been saying for some time. And I would still be slightly cautious. I think there is still room for derating in the consumer staples. So in the very nature of manufacturing, it takes a while before it starts showing results, especially if you are talking in terms of value addition. So I think it's a theme which will play out over next 5, 10, 20 years.
The likelihood is that incremental consumption will be more discretionary than staple. So not more biscuits, Because that's more, the 60th, 70th, 50th percentile, 40th percentile, not 90th percentile. So the likelihood of this being spent on discretionary items, the likelihood that some amount gets saved is also very high. At an aggregate level, the government is still bringing down the fiscal deficit.
Right. So those are some of the views coming in. But Kunal, I wanted to understand what are your BTST ideas for our viewers now?
So there'll be two buy calls. The first one is on Bata India. That's a chart which is looking attractive, especially after the third consecutive day of the price uptrend for Bata India, just about that 1400 mark. So we'd look out for targets in the range of 1500. Stop loss could be kept at 1370. And from the mid cap arena, it's some distilleries which start to come back into a breakout mode above 100 levels. So we'd look out for targets in the range of 125. Stop loss at 105.
All right. So those are the BTST ideas coming in from Kunal. Vinay, what are your BTST ideas for our viewers?
Yeah, so as I said, M&M Finance is one of the stock which I like from the NBFC. So again, I'm repeating 291 should be the entry, stop loss 286. On the upside, 300 is the target. The second pick, I would take it from the IT space. So IT has been performing very well today. And Wipro is one of the stock which I like. Technically, it has been into consolidation zone for last 7-8 session. Now it seems to be resuming its uptrend. So 313 should be the entry price. 307, I am suggesting a stop loss. And on the higher side, 325 should be the target for BTST.
Those are the BTST ideas coming in from Vinay as well. But Sunil, you've spoken about the sectors that you not look at. You spoke about the sectors, the consumption theme also in depth. I wanted to understand what's your view coming in when you talk about the quick commerce space, because yes, you have Swiggy that's fired up in trade today, and also some of the announcements in budget actually tend to benefit these players as well.
No, I think I'm very positive on that space because these are impulse purchases and quick delivery is important to satisfy an impulse. And impulse purchases go up when people feel happy and they feel wealthy, or the income has gone up. What the budget has done is to create that feel-good feeling among a significant section of the middle class, which was earlier paying taxes, now gets a relief, right? So naturally, you will feel that wealth. And before you actually get it in terms of your next year's salary and tax reduction, you will go and spend it. So I think that quick commerce is a very good play, which should benefit from the impulse reaction of customers. And definitely, they are also growing at the cost of regular brick and mortar retail in a significant way, and they will counter that. But I think that the nature of the consumer being much younger than earlier with our population, the demographic dividend in play, quick commerce is here to stay. And in fact, brick and mortar players should also be adopting quick commerce in a way. And these people being the front runners and the leaders, right? I think they are definitely good, not value picks. In terms of the valuations, they're probably already up there, but future growth should be very good.
Interesting. Let's begin winding up for the day then. Sunil, good to have you on the show as always. Good speaking with you, Vinay as well as Kunal. We'll let you guys go on that note as well. We're closing in about 100 points lower. 0.5% or so is the downtick that you're seeing on the futures. Sectorally, just want to mark what the color in the market has been. While technology, new age, chemical names have held out, not quite the case once again for infrastructure, power, metals, oil and gas and cap goods. They were the ones which continued to be hard hit. Bajaj Finance, of course, has hit a home run today. That stock lapped up about almost 5% in trade. And then, of course, there was Shriram too, which closed in higher by about 3.25%. And that was the case with the Chola Finance as well, which was a stark outperformer. That stock did very well in today's trading session. Other than that, of course, some of the large cap winners included the likes of Bharti. There was Wipro, which held out very smartly indeed. And then, of course, Maruti, Titan ahead of its numbers. Eicher reacted to its monthly auto sales numbers. All those stocks looked very good. Divi's Labs, Voltas, UPL were some of the other outperformers in trade. On the laggard side, L&T, BEL, the entire capex thing got sold into once again. L&T knocked off about almost 5%. BEL was down about 3%. And some of the consumption, or rather I should say staples names as well, did see a bit of a cool off. So Tata Consumer, Unilever, these two were laggard. ITC as well knocked down about almost 2%, and so did Britannia.
That's the way how the market construct looked like. If you talk about the sectoral performance, it was the IT index and the pharma index. The defensives that held out on trade today, both of them ending the day on a positive note. While on the other end, you had the energy, you have the PSU sectors that are under pressure, the mid to broader markets actually ending lower by about 2%. That's your small cap index. Metal as well was under pressure in trade today, given the fact that you had Trump that has announced a 10% tariff in China. You had the base metals that were dragging global markets, and that sort of has had its impact on the metal counters in trade today. Apart from that, FMCG is cooling off in trade today. You have also the PSU banks that have seen a cut of about 1.6% or so. But if you look at the way how the markets have fared in today's trading session, much better than the rest of the globe, Aisha. You have the US futures that are down about 1.5%, but we are just ending the day with cuts of about 0.5% or so for the benchmark, as well as Nifty Bank is down about 0.6% as we speak, though the advanced decline ratio has not seen a stark improvement from the day's lowest point.
We're shutting shop for the day, and come tomorrow we're only going to be inching closer to the RBI policy, and that's definitely something that's going to be key on everyone's radar. The anticipation is that the RBI should move on rate cuts, but let's see what actually transpires in the run up to that. Tomorrow, of course, other than a couple of earnings like Titan, etc., what's going to be key is to look out for how much more of a cool off do you see on US equity markets, because as we speak right now and see it, seems like we're headed in for a big decline overnight. The US futures are sharply lower. But for now, it's a goodbye from all of us. Thanks for watching.
If you like this video, then like, share and subscribe to ET Now.